So I'm going to talk about this around the world. I've already done 65,000 miles this year already. So I'm really, going to be this year about 250,000 miles of traveling. I'm the founder of Scale Group and also Cross Border Angels. So a little bit about my background that, as Vitali was saying, most of us have started very early. So I started my first venture when I was in college, and within a year, we could exit at 12 times. At that time, it was not considered to be exit. It was just we sold. We sold the venture. And then I started another one, a company in manufacturing. And within about 4 years, we could take the company public. And that was about 10 times the valuation. And I was still 30. And then I moved out of India I went to London. And then started a few companies there. And I found my first failure. And that was a big wake-up call. Because so far, I was so cocky that I could do anything, and I can win. But I failed fast, and also that wake-up call, I think, set the stage for me. That I was humbled, and then everything which I did afterwards, I really, really paid much attention to that I can fail. Then onwards, I moved to the U.S., did manufacturing. I had a company in Chicago, a joint venture in Germany, put up a plant in Middle East. All throughout, I had a few companies going on in India too. And that went on for quite many years, very successful outcomes. And by year about 2000, I felt that I'm getting bored in what I'm doing. Why? Because I thought that instead of new technology, it is a new business model which can make a much better ROI. And so I wanted to change the game from manufacturing and brick and mortar to the newer business. So I sold all my companies from 2000 to 2005. I had about 7 companies, about 900 employees between those companies. And then I started the new Scale Group. The Scale Group is basically a venture resource group, started in 2006. And we have various pillars. We look at the company and focus on how these companies can grow by applying global context. So global capital, global sales, global talent, and eventually global exits. And so now we have about 17 offices throughout the world. Our goal in the next 3 to 4 years is to have 50 offices. We have about 300 employees, and we're growing fast. We are a zero-debt company. We are really growing up as a micro multinational. So we walk the walk, talk the talk. When we say that you can do this new kind of ventures, which are micro multinationals, and we are proving it that you can do it that way. We're a zero debt and there is no outside funding. And so in 2010, 11, around that time, I went around about 13, 14 countries, met 300 startups. And what I realized that the innovation was happening everywhere, but the innovation ecosystem did not exist in many countries. And so I thought about putting together a group of people who are like-minded, who wanted to invest globally and change the game for a lot of entrepreneurs. So I formed the company called Cross Border Angels. We're about 150 plus investors. Now there are 2 underlying principles here. One is that the Silicon Valley model is great. We are part of that. I'm from Silicon Valley. But as Vitali was talking about, I don't like the statistics. When you have 30% failure, 30% unprofitable, 30% may have some 2 to 3 time multiplier and 1 blockbuster or 20% blockbuster. Those numbers are worse than the Hollywood. And Hollywood, if you make investment out of 10, 6 has break even. Maybe 2, 3 has a little bit of profit, or when it comes back, a little bit of profit, and 1 blockbuster. So if you take the entire uh, investment in venture and angel investment, the entire industry is about 50 to 60 billion. Now we are in a $75 trillion world economy, and we are only focused on 50 to 60 billion, which is important. It is disruptive, it's changing game. But in so many countries, so many cultures, exit may not be the right way of doing it. So we wanted to mix exit-oriented companies, which obviously we are part of that, but also wanted to bring new kind of investors who are patient, who are looking for growth, and many of them are want to invest in impact investment and committing back to the society. So that's how we are building this whole group of companies which are a little bit different. We're only 1 year old, so we are having great traction, but that is one of the principles. The second principle we have is, I'll give you an example that the last two companies which we have invested. One company is was found in South Africa. The company moved to New York. We've invested through a special purpose vehicle out of London. The investors are from Spain, UK, US, and India. The other company is in consumer robotics. They have robotic labs. And we moved the company out of India to Singapore. We're investing in Singapore. We got them a Carnegie license. We also got them a contract in Singapore because Singapore is a great place for edutech beta. And eventually that company is going to move to Canada under the Canadian Startup Visa program. Another company we have investing is formed in Australia, and we're also moving the company to Singapore. So it's not one solution. You can actually, apart from Silicon Valley, you can also choose various jurisdictions to make the company successful. And so some of the investments we made, but for me, making investment, and I've been investing since last more than 10 years, is very simple. So I look at team multiplied by product, multiplied by market, multiplied by time is equal to dollars. So if you apply 0 to 10, if any one of them is 0, you're going to get a 0 answer. Obviously, we're looking for a better ROI and exitable companies, but this is how I look at the company, and I bring in the evaluation. So let's go a little bit deeper. What do we look at in team? So the first thing which I look at is the domain expertise. And we heard today from Rick in the morning that when you move from the outsourcing company or a service company to a product company, you require a different kind of skill set. I remember during the .com one time, I visited one company which were in auction software. And they were very proud about their burn rate, $120,000 a month. And in the entire company, there was not one person who understood auction because they were coders. And they thought that was a really cool thing to do. So we are definitely looking for domain expertise, either as a co-founder or as on a team. The second one is the global mindset. Now, when I say global mindset, it doesn't have to be that the company has to be global. That means at least you understand what is happening globally and what happens in your own backyard. That means, for example, last week, I was in India, and Uber has now introduced their service in those three-wheelers, the tuk-tuks or rickshaw, they call it. Now imagine that in a town in India, a three-wheeler driver would never have imagined that an American company can come in the city and change the game. Many, many years back, I was also talking to one company in Midwest, and they were manufacturing advanced composites. Huge plant, they were 50 years old. And I had visited the plant. Fantastic, 200 clients, 1,000 different kind of products. But I saw that entire plant was about 30 years old. And I had visited before that a plant in China for similar product, which was completely computerized, huge, economy of scale. And I told them that either you have to go and buy the company in China or really upgrade your technology. But obviously 50 years in business, they were saying everything is fine. Within 2 years, the company went bankrupt. And guess what? All the assets was purchased by a Chinese company. So the global mindset is very key. The other one is a nonlinear thinking. As Ravi was talking about Moore's law, now if you really think about it, Moore's law is applicable in our lives also. Every 18 months, something changes which can affect us because the rate of change is accelerating. There was another futurist, he gave an example, and I'm adding my version of it. They imagine that adoption of technology is a highway, and you're adapting technology at different speed. So corporate world may be adapting the technology at about 100 miles an hour. Personally, we could be adapting at 60 miles. Education is adapting at about 10 miles. Healthcare, 5 miles. The politics, 3 miles. And religion is going in reverse direction. So when you have this really tremendous spread of adoption of technology on the same highway, there's going to be so much friction. And during that period of time, you cannot think in linear thinking that I'll finish this and then this and then this. There are certain things you have to do it that way, but you have to think simultaneously that what is happening in various sectors, various markets, and in terms of the investment also. The other one we look for is the flexibility. As an entrepreneur, by default, we are independent-minded person. That's why we become entrepreneur. But there is a very thin line between confidence and arrogance. And when we see an entrepreneur who's really, really in love with himself, we just walk away. Because it's not fun, because we're going to get, the last point is likable, because we really like to work with that person, and we want to work with that team. And if we find that somebody's arrogant, it's a problem. Also, the flexibility kicks in when you talk about the term sheets and valuations. So it is very, very important to stay humble when you're talking to the investors. The other one we look at is the innovation, 24/7, 365. Means it's not about idea anymore. It's all about execution. And so when you're executing, and in a nonlinear world, when in a globally changing world, when all these things are going around, you continuously have to adjust and readjust and refine and define. And that's, so you have a bigger framework. You can have a platform, bigger framework of consistency that, where you want to go. But within that, you really, really have to be innovative about how you're going to execute as the world around keeps on starts moving. So that's about the team. About the product. So we like that, it's okay to have a product which is solving existing solutions. So one of the companies I said, we talked about is the consumer robotic company which we're investing in, and said they do the robots labs for the schools. The idea is not new, it's there. But what they've done is they have a fantastic software platform on top of that, and then they've done it at a very lower cost. So it's easy to understand, and of course, everybody likes unicorns, but then you are creating a category. When you're creating a category, that requires millions and millions of dollars of investment, and that may not be our cup of tea. But what we look for is a company which is easy to understand and improves an existing solution. Differentiate, goes without saying that within that, how do you differentiate? And scalability. The scalability at a global level, that would be fantastic. And also we look at what is investable versus profitable. So it's great to have a profitable, but investable means there's a long-term thinking gone in under that. And obviously if it's cool, that's great. Then the market. So easy to test visa market. So for example, I think you have a fantastic situation in Poland for the Polish companies. There are 38 million people here. You have close to about $1 trillion GDP, $990 billion GDP. So this is a fantastic beta market, if you take it as a beta market. Because it is also, there's a danger here that when you think that this is a large enough market, you may not pay attention to the global market. So if you take Poland as a beta market, and then once you are comfortable with here, we can go global with that. So once you test something like in Poland and for other countries, you can, for example, there's another Finnish company we are working with. They're also in education tech. And that company also we are moving to Singapore because, again, for education, informal education business, Asia is growing very fast. And Singapore is a fantastic place for that. So once that beta is done there, then you can roll it out in a global market. Other thing which we obviously understand, that emerging market play. And I'll give you a couple of examples. About a year back, I was in Ireland, and there was a whiskey manufacturer, Irish whiskey manufacturer. And he asked me that who consumes the most whiskey in the world? Anybody here? Do you know? Who consumes the most whiskey in the world? No? So I was surprised that it was India consumes the most whiskey in the world. I thought it was US, So India consumes 350 million cases of whiskey, which is equivalent to the entire world's whiskey consumption. So now if you are, about a month back we were in Turkey, and I was talking to some Raki people while having some Rakis, that how many cases of Raki Turkey makes? And they're making about 7 million cases. That is the same for Irish whiskey, also 7 million cases. So just imagine if you can move 2% of India's market for Raki or for Irish whiskey, that can double the production back home. Another example was I met in Portugal, a company which produced something for lactose intolerance. And they were targeting the US market. And again, who is the most lactose intolerant people? Is Asians. And who has the highest manufacturing in the dairy production since 2005? It's been India. So I think you to pay attention to emerging market is extremely critical, and we like to see that along with the global mindset, the companies know that where their market exists. For most of the OECD countries, I think licensing play is also important, because most of the OECD countries has great university system, has a great ecosystem for research and development, but you don't have to go through whole 9 yards in terms of you don't have to do the manufacturing or getting it made. You can also license it. And the great thing about licensing is it's not only technology which you can license, you can also license branding, and you can also license now best practice. And so, particularly in the US, we have so much best practice because the large volume, large market, that we can actually take the best practice and also license the best practice. So we also like to see in some cases, the licensing play. We also, IP is obviously preferable. IP, patent protection, not in terms of protecting the patent trolls. Also, it is important to have IP. But you know what? Like brand never expires. IP expires, patent expires in 17 years. And so many European countries has some great branding possibility. They're old companies also. So we like to see some of the companies which is really focused on branding, apart from the patents. The timing is the market conditions, During .com 1, I tried everything. I did a food delivery business. I had an online city net on a WAP, which was the wireless access protocol. We were doing something with all those things, but the timing was bad. The The internet was like, opening up in like layers, right? So we were ahead of the time, and it's very difficult to do time your launch or time your product. So we have to look at the economic realities. The dot-com one was economic reality. 2008 was the economic reality. So timing in reference to something factors outside your control is also important. Cost of market entry. So last 2 years back when I was in Brazil, we also have a company in China. And Brazilian cost of a software engineer today is only about 30% or 20 to 30% less than the US. Why? Because when you have to add a CTC, you have to add all the costs. That means cost of the person, then you add the rent and the real estate cost. You also add certain security costs and things like that. When you add total up, now Brazil became part of the hot market of brick, not because of export. It became hot because of their own market. And there is a limit to which you can sustain, in your own market. They already became $20,000 per capita company. Now to bring that bar higher will take time. And so if you're looking at a Brazilian market, and when you look at that cost of entry has gone up so high, and the upside is not that high. China is doing the same thing. China has an eight-shape economy. They're very rich people, and they're very poor people, almost no middle classes. They're getting really squeezed. The starting price for a like in Shanghai or Beijing, for an average housing is equivalent to the suburbs of San Francisco. So when you're looking at and real estate price usually reflects in your cost. So we have to look at the cost of market entry, that in which country or which location or which city I can have a low cost of entry and upside could be huge, upside could be high. And again, you have to have a global knowledge about various cities. One other thing which we also do at a scale group level, that we've divided the world into 600 city-states. City-state, you should be able to use the old Greek concept. In today's economy, it is possible for a city-state to work on its own. For example, like Croatia could be, it's a small place. Estonia is a small place. So very similar to like Singapore or Hong Kong, which is a classical city-state. So by 2035, 65% of the world will be living in those city-states. So you really have to focus that, maybe there are certain markets, which are easier to go in, and upside could be huge. Maybe for beta, maybe you can establish in 8, 10, 9, 10 markets, and then you can have an exit or whatever your outcome is. So again, we look at, how you're thinking in terms of cost of market, stability in case things change. And it all goes back to the team level. Do they have a global mindset to understand that? Do have a nonlinear thinking to understand what is happening in the world? And because we have investors from around the world, our investment is smart investment. We have about 15 countries, right now, from the investors are in our group. So we can have a much smarter capital to bring into the game. And I think, this is the criteria for, applying to cross-border angels. And I'll end with one sentence here. Get outside your comfort zone and look at world as whole world as your backyard. Thank you very much.